This episode is presented by Avalara.
Hello, this is Anup Singh, CFO of Illumio, and you are listening to the CFO Thought Leader Podcast.
This is episode 907.
Using those metrics to help inform your strategy. Anyone can look at metrics. From my time as an investor, I could look at metrics at any given point in time and make an opinion on whether or not the company's performing strongly or not. But it's that next step, and that's the benefit of working as a CFO and working inside a company where you develop strategies to actually make those metrics improve over time. And that's where a lot of that value add comes from.
Hi, it's Jack. On today's show, we speak with Rick Rosenthal, CFO of CLARA Analytics. Rick Rosenthal had been working as an investment analyst at Bear Stearns for about 3 years when the bank became a casualty of the subprime mortgage crisis. He remembers sitting in front of his Bloomberg terminal in March 2008, watching a news conference at which a Wall Street expert was assuring viewers that Bear Stearns was a solid company, just as the bank's stock began to plummet. In a deal reached a few days later, JPMorgan Chase agreed to pay a mere $2 a share, all of Bear. Rick Rosenthal is part of the latest class of CFOs, many of whom, like Rosenthal, entered the CFO office for the first time during the COVID years, and who, like Rosenthal, had a front row seat for the economic downturn. That story and much more on today's episode. We'll begin after this.
This episode is presented by Avalara. That's the sound of not worrying about sales tax compliance. Because when you automate it with Avalara, you don't have to worry about collecting sales tax or tracking who and what is tax exempt. With Avalara, you don't even have to worry about new tax laws and regulations. Avalara does it for you. If your business sells internationally, Avalara has you covered with cross-border tax compliance solutions. And when it comes time to file tax returns, Avalara automatically takes care of that too, giving you one less thing to worry about. Avalara has managed billions of sales for small, mid-size, and enterprise businesses, and seamlessly works with your current sales, e-commerce, and accounting platforms. Take the worry out of tax compliance with Avalara. Learn more at avalara.com. That's AVALARA.com.
Hello, we're speaking to Rick Rosenthal, CFO of CLARA Analytics. Rick, welcome.
Thanks, Jack. Thanks for having me.
So, Rick, as always, we're going to begin by having you look back for us and try to identify some of those experiences you feel prepared you for a CFO role. What would come to mind for you?
Yeah, Jack, appreciate the question. And as I reflect back on my career journey to becoming CFO, I really break it down into three separate parts. I think the beginning stage of my career was focused on the strategic finance skill set. And I started my career on Wall Street, and I'll dive a little bit more into that. But from there, I complemented that skill set with an operational finance skill set from my time at CLEAR. And then from there, and more recently at my time at WeWork, I really learned how to scale a finance org. So before I dive into the strategic finance skill set, I think it's helpful just to quickly explain what I mean by that. And to me, the strategic finance skill set is really understanding how companies create value. How do they allocate resources? What's the optimal capital structure? And my early part of my career, I started on Wall Street. I did a 2-year investment banking analyst program at Citigroup in New York. But even more so, spent about 7 combined years in the hedge fund world. I was a long-short equity analyst for about 5.5 years at Bear Stearns Asset Management, and then another 1.5 years at More Capital. And in that role, I covered the industrial sector. So I analyzed over 100 companies ranging from commodity-like companies like steel manufacturers and paper manufacturers to transportation and logistics companies like a FedEx or a JB Hunt to large global manufacturers like a Caterpillar or a Deere, and really got to understand the underlying business models, what were the key drivers, how macroeconomic trends could affect the stock prices of those companies. I got to visit company plants like in Everest, Washington. I went to Boeing 787 assembly plant. I visited a titanium steel mill in Cleveland, Ohio. So also attended conferences and spent a lot of time on earnings calls. And through all of that, really got an understanding of what it is that investors look for inside a company, and how these companies drive value. So learned a lot in those roles, but it was very intellectually stimulating, but at the same time, it wasn't, for me, intrinsically motivating. So I got this real clear understanding of what it took to create value inside a company, but I wasn't the one creating the value. I was simply investing in the stocks and hoping that these management teams would create value. And I always had this urge to work inside the company and help make those decisions to create value. And so, in my view, again, I was based in New York City. I felt like the startup ecosystem in New York, this was now, call it 2013, that it was about to really start taking off. I felt that I had a really unique skill set that I could bring into the startup finance ecosystem. And I had the opportunity to join CLARA, the biometric technology company that today is in over 50 airports. But when I joined was, in probably 7 airports at the time. It had just relaunched out of bankruptcy and effectively started from scratch. So I came in thinking, oh, wow, I'm going to apply my strategic finance skill set. I'm going to help this company allocate resources, and we're going to create value for this company. But what I quickly learned was that there's a whole nother component to finance that I had missed during my time as a hedge fund analyst, and that's the operational finance skills. So I still remember roughly a month into the job, I was informed by the leadership team that we had made the decision to shift off of a PEO, or a professional employment organization, and instead we were going to bring payroll in-house, and I was going to be overseeing payroll. Now, at the time, we had roughly 200 employees all throughout the country, many of whom were hourly employees. And that was just one part of finance that was going to fall under my purview. On top of that, I was obviously responsible for accounting, for accounts payable, for billing and making sure we were collecting our revenue. I was responsible for our company audit. Now, obviously, I was still working on the strategic finance side. I built our company model, but again, got the opportunity to complement that skill set with these new operational finance skills.
Rick, you're part of a class of CFO that sort of enters the C-suite during COVID. But turn back the clock, you were, in the midst of things during the economic downturn. And I'm hoping you could go back in time for us and just share a snapshot of what went down for you, because again, you were at Bear Stearns when it collapsed. I mean, that's a piece of history. That's a piece of business history now that you experienced firsthand, and you're not alone. Many finance leaders were sort of caught in the teeth of it all. So, but can you go back in time and maybe just tell us, uh, just a snapshot of where you were, how you received the news, what exactly happened when the collapse became imminent?
Sure. So it was very interesting. As an investment analyst, I had been there at this point for roughly 3 years. And I had followed the stock market, obviously, on a daily basis. I remember sitting behind my Bloomberg terminal, watching all the stock prices. And there was a conference going on at the time. And I believe it was Bill Miller from Legg Mason who was talking about Bear Stearns and talking about how it's a solid company. And then all of a sudden, its stock price during this Bill Miller presentation had plummeted from over $100 to under 50 and then under 40. And ultimately, Bear Stearns was acquired by JPMorgan for $2. And yeah, it was a challenging time. It was a lot of obviously concern throughout Bear Stearns. There had been people that had worked there for a significant period of time, had a lot of equity tied up in there, and yeah, it was disappointing to a lot of folks. Our fund, we started wondering what's going to be the impact to our fund. While our fund was performing well, we were part of Bear Stearns and part of this entity that had been acquired by JPMorgan. JPMorgan had its own fund. So the question was, what was going to happen to our fund? And eventually we spun off of JPMorgan. We spun out on our own, and we had lost some assets, but we were still going at it on our own. I made the decision from there where I saw where our assets had gone. I had always had this passion of, again, working inside a company and helping make the decisions that create value, being less dependent on macroeconomic shocks and the performance of third parties, controlling more of my own destiny.
Were there other takeaways here for you? And again, you mentioned how you open another chapter at More Capital. But what exactly are the funds that you're involved with, and what are the circumstances surrounding those?
Yeah, so actually at Bear Stearns, our fund was independent of the overall company's performance. So it certainly was a tremendous learning experience, more so for how it impacted the companies that I was following than it impacted my fund. We ran a long short equity fund and a market neutral fund. And relative to traditional asset management funds, investment management funds, we actually performed pretty well. But I did get to understand much more clearly how integrated the financial system is into the economy. So there's some companies like even a Caterpillar, who most people think of as a manufacturing company, but they also have a financial services arm that depends on the capital markets to help customers finance the purchase of Caterpillar equipment. And so, or even a General Electric, a huge part of their business was financial services oriented. And then all of a sudden, even from a secondary impact, if all of a sudden credit dried up, then a lot of companies that may not have had a financial systems arm, well, their customers could no longer get the financing, or their businesses were being impacted, and therefore it would impact the underlying companies that I was following. So it's actually interesting. So the burn period that I had was actually more when I was at More Capital, which was also a long short equity fund. It was actually it is a global macro fund. And they had started a brand new long short equity fund, which was the strategy that I had grown up in. And they had brought me in to be part of the industrial pod. And this was during the Greek exit, fears of Grexit. At the time it was called. There were a lot of concerns about just the euro in general. And a lot of these global macro funds were struggling significantly. And More Capital itself, after I had been there for about a year and a half, made the strategic decision to return a bunch of capital to its own investors and restructure my team. So suddenly I was at a crossroads figuring out, as a next step, do I want to continue down this path in the hedge fund world, or do I want to follow my passion, work inside a company? And again, I felt I could make most of the difference in the startup world. And so that's when I made that pivot to CLARA.
Now, just for our listeners, CLARA is the biometric technology company. It's used their offerings at airports. I went to a conference I know, and there was CLARA, just making sure everybody was safe.
Absolutely. I didn't realize initially what I was getting myself into. So I thought, here I am coming with all this Wall Street experience. I know how to model. I know how to predict and forecast companies' earnings. But what I quickly learned was there's a whole nother aspect to finance, this operational side. And I gravitated to it. I mean, it came natural to me. It wasn't as, quote unquote, glamorous as the strategic side, but it's imperative and important to understand the full realm. You don't have to be an expert in all of it, but you need to know enough to make sure the bills are getting paid. Your employees are getting paid. You're collecting money from your customers. You have enough cash in the bank to pay everyone. These are all really core finance skills that are important to know that I didn't get from my time on Wall Street.
So it looks like you had a rather senior role at Clear within the FP&A realm, and you move on to WeWork in 2016, where you spend 4 years. It looks like another big role for FP&A. Can you clarify that for us?
Sure. So actually, when I joined Clear, it was a very lean team, but I was the VP of Finance, reporting into the president and CFO. But that's essentially what it was. I ended up hiring in-house a senior accounting manager and an accounts payable and payroll manager. I was there for about 3 years, but then to your point, I started bumping up against the ceiling. I had learned a ton. The company had been growing nicely, but there wasn't really the opportunity to scale the finance org. And it was at that time, 2016, where I found out about the opportunity at WeWork to be the global head of FP&A. And at the time, WeWork had about 500 million of revenue. It was, from an operational perspective, very HQ driven, corporate driven, but it had raised a lot of capital, and it was about to embark on this journey to become a global sprawling enterprise. And I had this opportunity to join as the global head of FP&A and really build out that organization essentially from scratch. And along the way, I not only built out the FP&A org to a team of roughly 15 people, and I structured it in a way where there was part of the team focused on business partnering, so they were embedded in with the various functions, and helping provide visibility to them in their financial performance, but then also a corporate strategic finance aspect that was responsible for board presentations, for investor presentations, for ad hoc analyses, and just better understanding our overall performance. So I got that opportunity. And part of that, by the way, was, again, when I started, there wasn't really a team. I grew that to 15 folks. There's a real skill set to recruiting tremendous talent. That takes time. Worked very closely with our talent acquisition team to build out that team. But then on top of that, part of scaling is also putting in place the processes and systems that allow you to scale. So some things that may work when you're smaller and maybe more manual, need to be optimized as a company scales. So I had this amazing opportunity. The company went again from this HQ-centric, New York-centric operational model to a global sprawling organization with operations in South America, in Australia, in China, in Japan, all throughout Europe. And we built finance hubs across the world. We had to coordinate with all of them. We had to factor in things like constant currency adjustments in order to measure our financial performance. So a whole new world of financial challenges and solutions that I got exposed to. And that's what I'd say really gave me the confidence to move on into a CFO role.
No question, the experience that was there to gain regarding how to scale this company and watching it grow. At the same time, there had to be other takeaways. Clearly, the WeWork story is one of these other business history chapters uh, that people are aware about, know about. The overzealous founder, perhaps. What is the takeaway? There's more, I'm sure.
Yeah, it's a good question. And I think that um, it was an important lesson in corporate governance. But even with that being said, I mean, our lead investor, it's been well reported, was SoftBank. And I think what drove their strategy at the time was growth, more or less at all costs. And there was a direct line between SoftBank and Adam, our CEO and founder, and that was the message being conveyed. And he was being rewarded, and the company was being rewarded for that with more investments and a higher valuation. But when you take a step back and think about what's sustainable growth, you know, I think some of that may have been lacking. And there was a hope maybe that ultimately, through all this growth, we could grow into, really strong unit economics that would allow the company to thrive in the future. And I think maybe, some of the core underlying unit economics and really understanding what drove value may have been missed. And I think that's probably some of the lessons. So even though we were able to raise at increasing valuations, that wasn't necessarily a sign of success.
So tell us, the CFO office is in your sights pretty much, though. You're at a senior level. You've experienced different aspects of the financial world, clearly, as we've covered. And now, are you thinking, okay, I'm prepared for a CFO role now? Did it happen just that way, or was it a little different?
A little bit different. So I will say, despite what happened at WeWork, the experience was tremendous. We had a lot of resources. We hired some amazing talent. We had really, world-class organizations, even within finance, a separate tax department, international, tax department, an international treasury department, obviously an accounting department, a business system. So I learned a tremendous amount. Was still at WeWork post, the failed IPO, and then post even the pandemic, which was the double whammy. But then was reached out to by a recruiter for a really unique opportunity at a company called Flutterwave, which is a payment processing and technology company based in Africa, similar to sort of a Stripe, but for Africa. And there was an opportunity to join there as the global head of finance. I had learned a lot about digital payments from my time at Clear. And I learned a lot as I was found out about this opportunity about Africa as a continent, and that it's projected to be the fastest growing continent for the rest of this century. And it has a very internet and mobile native population. So a really exciting opportunity to join. They were a Series B stage company at the time. I was there for about a year. I worked closely with our CEO to help lead our Series C fundraise, which was 180 million. And it led to Flutterwave being one of the first African-led unicorns in the entire continent. So that was a very proud moment that I had in my career. It was during the pandemic, and it was before the vaccines had really come about. And over my time there, I recognized the need to travel more than I was able to. Again, given the circumstances at the time, I was the global head of finance there, so not quite the CFO title, but effectively a similar type of role. I was, working with the board, presenting financials during board quarterly board updates. And again, was there for about a year before I got the opportunity to join CLARA Analytics as the CFO.
Well, that's a nice overview for us. So thank you for that. We are, well, let's ask you about CLARA Analytics, find out about this company. What does it do? And what were the offerings that perhaps brought you there? What was the opportunity?
Sure. So CLARA Analytics is an AI-based software platform for claims organizations inside the commercial casualty industry. So what do I mean by that? If you think of an adjuster that's working at a carrier or maybe even a self-insured, so many companies manage these risks in-house without using an outside carrier. But they may be managing, an adjuster may be managing 100 plus claims at any given time. And there's a lot of information that's coming in on a daily basis. And it's hard for any individual to, read all of that information, comprehend all of that information on sort of a real-time basis. And so what happens is they'll review it periodically. So they'll have a set of claims, and then every 30 days or even more, they will review what's transpired over the past 30 days. Well, what our tools do is we take that information daily and we augment the adjusters by alerting them to which of their 100 claims, based on the information that has come in, require your attention today. So it allows the adjuster to be more strategic in managing the claims and optimizing outcomes. What drew me to CLARA Analytics was an opportunity. It's a Series B company. The CEO, Heather Wilson, has tremendous background. She was the former chief data officer at companies like Citigroup, AIG, Kaiser. She's on the board of Equifax. And I met her and we just clicked day one. And it was really interesting opportunity on top of that because she was relatively new to the company. And we had this opportunity essentially from scratch to rebuild some of our team, some of our products, and our go-to-market strategy, and really think through, how do we want to invest capital in a way that's going to get CLARA, growing significantly. And we've made those investments and excitingly have seen revenue grow tremendously.
So can you tell us a little bit, you arrived in 2021. Can you tell us a little bit about your arrival and whether you reorganized finance in some way or changed something up? What would you tell us?
Yeah, so good question. So we are a Series B company, relatively lean team. I've kept most of the team intact and the structure right now as is. But what I have done is I've built out our long range plan, which gives us our North Star metrics that the companies can really focus on and use as sort of, again, this North Star at which we can, achieve some of our goals and measure our performance.
Where did you and it sounds like you created this model for long range planning, or you came up with a way of looking at the world. What influenced your thinking? Any past experience, clearly, or is there another company that perhaps might be similarly positioned? Don't know. Benchmarking wise, how'd you come up with this?
Yeah, it's a good question. So when I start at a new company, that's one of the first things I do like to do is build out the long range plan, because it helps me get to understand what are the real drivers of the business, which functions help drive performance, who are the main customers that are driving performance, what are the triggers, what are the drivers that we should be focusing our attention on in order to have revenue grow, ensure it's growing profitably. So it's just been based on my experience. It's a great way to understand the business when you're new to it. And it's a great way for the cross-functionally for folks to, again, align on a plan and a vision.
Excellent. Is there, we always like to refer to metrics as lines of sight into the business, and we're wondering, maybe you can share some of your top of mind metrics with us. One would think it's often SaaS
Yep.
metrics, unit economics, but maybe there's something more you can shed light on what you're paying attention to. What comes to mind when we ask for your top of mind metrics?
Yeah, great question. And to your point, CLARA is an enterprise SaaS company. So clearly we look at the traditional metrics like ARR growth. Is that coming from new logos? Is it coming from expansion? Retention metrics like net dollar retention and gross dollar retention and logo retention, sales efficiency metrics. So all of that. We also look at usage metrics. But I think what's more important than that is using those metrics to help inform your strategy. Anyone can look at metrics. From my time as an investor, I could look at metrics at any given point in time and make an opinion on whether or not the company's performing strongly or not. But it's that next step. And that's the benefit of working as a CFO and working inside a company where you develop strategies to actually make those metrics improve over time. And that's where a lot of that value add comes from.
So since you've been there, was there perhaps a particular measure that you thought could better educate the organization about, or part of the team about? Maybe it was something the sales team you think should be paying closer attention to? I don't know. It could be anything. Anything?
Yeah, sure. So from my time at CLARA Analytics, there was one aspect, obviously, as a enterprise software business, there's a large part of our costs from AWS infrastructure costs. From my time at CLEAR, I knew that we had purchased a lot originally in the spot market, but by buying upfront, we were able to reduce our costs significantly. And when I joined CLARA, I had the similar thought where I worked with our product team and our technology team, and dug into our AWS spend to get a better sense of how much we were spending on demand or in the spot market versus what I had remembered reserved instances, but now they've got something called a savings plan. And our mix in terms of purchasing on demand or in the spot market, which is more expensive, was significantly higher than it should have been. And so call it in the 80% range. So we've flipped that completely on its head. And as a result, have been able to bring in some of those costs and improve our gross margins along the way.
Are you folks, are you big champions of the Net Promoter Score? Is it something you use, or?
Yeah, so clearly we don't specifically focus on that metric, but we have a dedicated customer success team that meets with our customers on a weekly basis just to make sure they're engaged, to help answer any questions, help communicate the value proposition and ensure they're receiving all the value that we expect and that they expect from purchasing our products.
Now, you, again, characterize it as an AI-based company. Can you tell us a little bit about, again, since the start of the year, so many companies have begun to explore ways to leverage AI. But what is the history of this company and AI? Does it go back? It would occur to me that it goes back a little longer than most of the folks you've been speaking to lately.
Yeah, so great question. So CLARA Analytics was initially incubated in another company called Leantas, and we spun out of Leantas in the fall of 2017 as our own independent company. We've got some models that have been learning since even before our spinoff, and it's more sort of on the predictive AI modeling side, and also leveraging natural language processing as well. But to your point, more recently, there's been this trend of generative AI. And we have been working internally on ways to marry the predictive AI and the NLP that we've already developed our expertise in. And we've got this unique asset, which is our contributory database, which we believe is the largest in the country, and it's proprietary of open and closed commercial casualty claims. So we're marrying this predictive and AI with some of this generative AI to create even more exciting solutions for our customers.
Has there been when will you introduce your latest product upgrade or some sort of enhancement to the offering? And will that be an AI enhancement, or what would you be up to?
Yeah, so we're continually developing new products. I should mention when I first started, we were primarily in the workers' comp line of business. We added commercial auto as a new line of business last year. And this year we've added general liability as a new line of business. So we are fully covering the commercial casualty industry with our products. And yes, we've got some really exciting new products on the way as well, including one that we recently launched called Optics. And that allows our customers to get more real-time information by what CLARA does is we receive medical bills, medical records. We're able to, in a matter of hours, turn that around, deliver insights and analytics, and leverage that with our, again, contributory database and the predictive modeling that we've developed over the years to provide solutions even more real time to our customers.
Just want to, you mentioned your Series B, wondering if it's not the climate right now, and it's not great for raising money, we understand, but are you expecting to raise money this year or next?
So we're fortunate to have some really amazing investors that are supportive. We're focused right now on managing our cash flow. If we choose to raise capital, that'd be great. There's opportunities to invest even more so in our products and our go-to-market strategy. But right now we're focused on executing, managing our own cash flow, and controlling our own destiny.
Nice. Thank you. Thank you for that. We're up to what we refer to as our finance strategic moment. This is where we ask you to look back in time and just identify one moment of strategic insight that you've had along the way. It might have happened last week. It might have happened 10 years ago. What comes to mind when we ask for a finance strategic moment?
Yeah. So, I think back to my time at CLEAR, and I mentioned, gaining that operational finance skill set. And then as part of that, overseeing payroll. And if I shift gears for a sec, I remember coming in and our CEO and CFO at the time had the sense that we could increase our sales on a daily basis. So we had really good data, and we were able to see at the various airports how many sales we were generating each day. And we could even see it by ambassador, which was what we called our employees at the airports. And most of those, again, were hourly employees. And so, as I mentioned, I was overseeing payroll, and I was able to see and have visibility into the number of hours that were being worked by employee by day. And so while the company historically had focused just on the total absolute number of sales each day and how many sales were being generated by ambassador, if I came to the realization that if we combine that information with the number of hours worked, we could come up with a productivity metric, like a sales productivity metric. And so there may have been some ambassadors who just weren't working as many hours, but were very effective at sales. And sure enough, we combined the two data sets. And there were some ambassadors who we hadn't been as focused on because they weren't generating a high absolute volume of sales, but they were highly productive when they worked. And so after identifying those ambassadors, the next step was working with our operations team to make sure from a scheduling perspective, we could fit those folks in while the lanes were busy, while the lanes were most busy. And so I remember at the time, we piloted this in 3 different airport locations. And sure enough, the sales in those locations doubled over the course of a month relative to where they were. So that was a really cool finance strategic moment that I'm personally proud of, and it shows how finance can really have an impact on the company's performance.
From episode 848, this is 1 Minute with Evan Goldstein, CFO of Seismic.
That I'm really excited to move forward with at the company is bringing subscription economics. I am a huge believer in a SaaS company that you really need to look at CAC, lifetime revenue. Those are really, really important metrics, and they need to be part of the decision-making process for investments. And we're at a stage, right? We're at an inflection point right now where we can start bringing those in as we become multi-product. We're expanding internationally, looking at the economics, the subscription economics of each of those businesses, and help make the business make effective decisions. And so I think that's the next evolution of where we're going to be, and really excited to go on this journey.
We're going to jump to our mentoring round where I ask you several quick questions intended to inform and inspire future finance leaders. We want you to think back to your first 30 days in the CFO role. And given all the experience you had, there was still something you wish someone could have whispered in your ear. If you could go back in time and just tell yourself something during that first 30-day period, 30 to 60 days, let's say, what would it be?
Yeah, I think it's to really get to understand the business. Don't be afraid to ask questions. No company is perfect. There's a reason they brought you in as the CFO. And a lot of times companies suffer from inertia, right? Something was established years ago and it's just become the routine. So don't be afraid to ask questions, challenge the status quo, and even make suggestions on ways to improve. I gave the example earlier on about purchasing AWS spend on the spot market and questioning, why are we doing this? Is there an opportunity to purchase more upfront and save significant money? So that's some of the advice I'd give. And also build a great relationship with one or two of your board members. I think it's great to bounce ideas off of them, get their advice. That's really been helpful for me as well.
Great. Thank you for that. We always like to ask our guests to reflect a little bit on the personal side of things. We're wondering if you have a habit, part of a daily routine, something that sets you apart, people point out you're known for. Anything come to mind? Personal habit, part of a daily routine, something that sets you apart?
Yeah, so not really a daily habit or anything like that, but I will say, I developed Excel modeling skills back in my day as an investment banking analyst. And for whatever reason, I've continued to enhance and improve those skills. So I still have maintained those Excel modeling skills to this day. And what I have found is it's been really helpful actually when I work cross-functionally as well, in just helping translate some of the ideas that other leaders may have and tying it back to our financial plan to make sure we're operating efficiently.
Let me ask you this. You meet someone else who tells you they're like grade A Excel modeling. They're an ace. What's the one question you would ask them to determine whether they are or they aren't? And anything you kick their tires by asking them?
In a brief conversation, I'd probably ask them for what's the most complex function that they use in Excel. But it's interesting because if I'm interviewing for a role that's very Excel heavy, I will actually ask the candidate to build out a model. And that's my way of judging their Excel modeling capabilities.
You'll see the model itself. Yeah.
Exactly.
Excellent. Well, thank you for that. Wondering if you have a book recommendation for us. It doesn't have to be a business book. It might be something you escape with. Any book selection?
Yeah. So I mentioned early in my career when I was in the hedge fund world as a long short equity analyst, and I learned about value investing. And that was something that really resonated with me. It helped me understand what's a good business, how do companies create value. And there's a couple books that I can recommend that speak to value investing. One is called The Little Book That Beats the Market by Joel Greenblatt. And it's a quick, easy read. And a second book, which is a little bit more in depth, is called Value Investing from Graham to Buffett and Beyond by Bruce Greenwald. Again, talks about value investing, sustainable competitive advantages, earning, a return on capital that exceeds your cost of capital. So highly recommend those books.
Yeah, nice. We haven't had them before, so thank you for those. Finally, we're up to our last question, Rick, where we're going to ask you to look forward for us 12 months, and we'd like to know what your CFO priorities are for that period. What come to mind?
Sure. So we touched on this a little bit earlier, but we've got some really exciting products that we're bringing to the market, and just ensuring that we manage those launches with financial discipline, that we grow profitably for some of these new products. And then also we have some exciting opportunities with our existing products that we've identified where we can even streamline those a little bit more and help improve our financial performance.
Rick Rosenthal, thank you for joining us on CFO Thought Leader.
Thanks, Jack. Appreciate your time.
Hello, Thought Leader listeners. As you have perhaps already heard or even seen, we're now featuring the career lessons and moments of strategic insight shared by our CFO guests as Thought Leader videos. You can now find these videos on our blog at cfothoughtleader.com and, of course, our newsletters, but also on LinkedIn. If you haven't already, please go ahead and follow our CFO Thought Leader LinkedIn company page, and you'll be certain not to miss a single Thought Leader video debut. CFO Thought Leader, the #1 thought leadership platform exclusively for and by CFOs. As always, thank you for listening.